And now the deltas are changing slightly. So let's see. If it drops down, we can always change these orders later too. Let's see if it drops down to 35.60. We're going to buy 200 shares back. Now you can move these around any way that you want. Let's see, we got to go down to 35.60, which we can just type in if we want to. And we are going to make that a good to cancel order. And basically what we can do is just enter these orders, and then, you know, if we sell another 160 shares and it goes back down to 35.60, we're going to end up buying shares. The only thing that you really need to keep an eye on is, you know, if your deltas change before you actually get these orders in. So in other words, as the stock drops, you know, your deltas are going to be, you know, changing. So right now it's already changed to 35.59. Now we need to buy 220 shares. So I mean, it does change around a little bit, but you could enter these orders. Let's say you have something to do and you don't really want to play around. You can enter both of these orders if you don't have time just to kind of sit down and look at your stock. So, you know, as long as you have your prices right, you know, make sure that you take a look at your Analyze tab here. Now, you could also do this based on the chart itself. In other words, if you're a chart person, if you've identified support and resistance points on the chart, you can also set your limits to those areas. In other words, let's say you think this is a support area right here, and you think this is something like a resistance area right in here. You could set your if you think we're going to be in a trading range for a while, what you can do is you can set your prices to purchase stock when it's at 34. Let's see what level it's 34.69, and sell it when it's at 37.07. That's a pretty wide range in which we can actually trade this stock. So if you think those are important support and resistance points, you can actually place your orders in to buy and sell at those levels. Remember that your stock position is covered, your short position is covered by the 1035 calls, and you have you're long the 35 put, so you're protected in either direction here. Now, one thing before I do this, you can enter these as orders right now if you want to, and just let them run, and then when they're filled, of course, you can always enter in new orders in order to capture the price movements, but I'm not going to do that right now. I'm going to delete both of those. What I want to do is I want to show you how we enter these positions into our worksheet to keep track of our position. We're going to go over to sheet 2. Let's see, we have to enter into the information. We got 10 contracts. We have to enter the straddle price. Let's just take a look through our we got the straddle price at $3.15. We take a look at our order book here. Today's date, which is July 26th. We have 18 days to expiration. We want to make sure that we keep an eye on that at all times, because the closer we get to expiration, hopefully the more opportunities we'll have to trade this stock. Now, we sold 390 shares, and we sold it at the price of $36.64. And so we are net short 390 shares right now. So now when we go into a I'm going to put a little minus sign in front of that one. When we go into the position in which we have, when we buy those shares back, and we bought those and we put in here, we include our gross profit and loss, whatever fees that we've incurred here. We had a $5 fee, I believe. Let's just go ahead and let's see exactly how much that is. Yeah, that was $5.40. So it's relatively inexpensive to trade stock rather than options all the time. And then what we do is we'll keep a running P&L. The actual cost of these was $3,150 for the straddle. And now what we want to do is the current market value. We want to keep the current market value, the current market on the straddle. So every once in a while, you can come over here and take a look at what the current straddle is selling for. Let's see, if we had to go ahead and buy this straddle again, actually if we wanted to sell the straddle, we'd get that price. It's at 305. Obviously the difference is the bid and ask spread, but we're not going to fill that in yet. What we want to do is just log all of our information so that when we do a trade, we make sure that we keep track of our, what is today anyway? Today's the 28th. We want to keep track of our running P&L as we go along through the trade. And that's all we really want to do. So right now that's what our position is. That's our straddle price. We bought 10 of these. In other words, and our symbol is AVP. Our date, our total cost. What we'll do is, since that is our cost, the $31.50, as we make a profit on our gamma trading of the stock, we will enter our gross profit and loss into each one of these in our running P&L and subtract that from our cost of $31.50. In other words, now between now and the expiration in 18 days, what we want to do is not only have the value of the straddle, ideally we'd like to have some value left in that, but we want to be able to make more from our trading of the stock as we get closer to expiration, to not only go above and beyond the $31.50 that it costs us to enter into the straddle, but also way above and beyond that in order to make a really good profit on this trade. So we're going to save that, and we're going to come back to this. If I have to make an adjustment to this position today, you guys will be the first to know, because that's exactly what we're doing. We are going to keep an eye on the deltas. We're already short 43 deltas, so the stock has moved down a little bit from where we shorted it at 390.